The final one in the, the final part in the audit report is report on other legal and regulatory requirement. Report on other legal and regulatory requirements. Now we have various matters to report. Under report on legal and regulatory, 143.1, there are 6 inquiries. 143 subsection 3. 143 subsection 3, we call them as checklist or we call them as affirmations. Approximately 16 matters were there. Okay. Then we have 143 subsection 11. 143 subsection 11. Then we have 21 matters here. Total 21 plus 16, 37 plus 6, 43 matters. There are 43 matters which auditor has to specifically inquire, specifically verify and report in the auditor's report. In audit report, where this will come, same in audit report, opinion, basis for opinion, key audit matter, emphasis, other matter para, other information para, responsibilities of management, audit responsibility. Then you will get report on other legal and regulatory requirement, one side heading. So there we will give it as an appendix. All these matters will come in the appendix. CARO is generally given as an appendix, okay? But 143.1, 143.3 will be given inside the audit report itself. Understood? Now, first we'll finish, CARO. And apart from 143.11, there are some other reporting requirement. 143 subsection 12. What is this 143 subsection 12? If auditor identified a fraud, okay, for less than 1 crore, auditor has to intimate it to audit committee or board of directors as the case may be. If audit committee is there in the company, report to audit committee. Otherwise to board of directors. What you need to report? Nature of the fraud, amount involved, parties involved. Further, board of directors has to report the same matters plus one more additional matter. Board of directors shall include the same, whatever audit reported, all the 3 issues plus what actions they have taken. That and all has to be reported in board of directors report. Suppose if the fraud is more than 1 crore, you have to report directly to central government within 60 days. Okay. Now, manner of reporting, if at all fraud is more than 1 crore, first report to board of directors within 2 days. Get their explanation within 45 days. Forward to central government along with explanation. Yes or no? Report shall be on the letterhead of the auditor. The same requirement is applicable for cost auditor and secretarial auditor. And remember, the same fraud matter should also be reported in clause number 11 of the CARO. If at all any form is filed with the central government ADT 4, that information has to be given in CARO clause also. That's it. Now CARO. Okay, this is applicable for all companies except banks, insurance, section 8, OPC, small company and private limited company subject to 4 conditions. And remember, I have given here this private limited company 4 conditions is there, right? Not a subsidiary, not a holding of public limited company, paid up capital and reserves and surplus shall not exceed 1 crore on balance sheet date. Loans and borrowings from banks and financial institutions shall not exceed 1 crore at any point of time during the year. And turnover calculated as per schedule 3 including turnover from discontinuing operation shall not exceed 10 crore. So these and all conditions were there, right? Now it is irrelevant. Why? Because most of the private companies, all these private companies, no, whoever is satisfying this condition, they all come under small company definition as per guidance note on the CARO. So as per guidance note on the CARO, if a company comes in small company directly, you don't have to check private company conditions. So which means these conditions are irrelevant now. If an MCQ comes, you need to categorize it as a small company. What is a small company? Capital less than 4 crore, turnover less than 40 crore. That's it. It's a small company. Are you clear? So if a private company, capital is less than 4 crore, turnover is less than 40 crore, borrowings doesn't matter. 1 crore, 10 crore, 20 crore doesn't matter. Understood? So a subsidiary holding doesn't matter. Getting it? So if a private limited company comes under small company definition, naturally it is exempted from CARO. Next. And remember, for holding companies, subsidiary companies, CARO limits has to be computed separately if it's a private limited company. And for companies with branches, CARO limits has to be based on entire company. Even these 2 conditions are also irrelevant because now we are not checking private limited conditions itself. And remember, if a company is applicable for CARO, liable for CARO, all the branch auditors are also has to give CARO report. And non-applicability, you don't have to give CARO report on consolidated financial statements. On consolidated financials, you will give audit report, right? In that audit report, CARO report need not be included. And remember, however, clause number 21 reporting alone will apply. Now, what are the various matters that are included in CARO 2020? There are 21 clauses totally. First clause is fixed assets. Under fixed assets, there are totally 5 matters. What are they? Fixed asset register, physical verification, immovable property title deeds, and revaluation aspect and Binami transactions. Fixed asset register, whether company is maintaining proper records, quantitative details and situation for PPE and intangibles, whether a register is maintained or not. 2, whether these fixed assets are physically verified at reasonable intervals. If at all they identify any discrepancy, whether they were properly recorded or not. Third one, title deeds of all immovable property, are they in the name of the company or not? If not, disclose the following details. What is the description of the property? What is its gross carrying value? In whose name it is held? For how much period it was held in somebody else's name? Why it was not in the name of the company? Reasons. These are the points which you need to indicate. Then revaluation. Whether this PPE intangibles are they revalued by registered value? Suppose no, during the year company went for revaluation of these fixed assets. Who did this? Registered value or not? Check out. First question. Second question. If the amount of revaluation is more than or 10%, more than or equal to 10% in net carrying value per class for buildings, how much change? Before revaluation, after revaluation, net carrying value. If the difference is more than 10%, it may be upward or downward, doesn't matter. The difference is more than 10%. The auditor has to specify the amount of change. Next, finally, Binami. Are there any proceedings initiated or pending under Binami property transaction law? If so, whether financial statements are appropriately disclosing it or not? Remember, here our question is what? Are the financial statement disclosing Binami related? In Schedule 3, in 2021, there is something called additional regulatory information update is there. In 2021 year or 22 year, Schedule 3 got updated with additional regulatory information. There are so many places where the company has to give additional regulatory information. Whether the company is giving that information or not, auditor has to report in CARO. We don't have to give information in CARO. We have to give a comment in CARO whether additional regulatory information is reported by the company in the financial statements or not. You see, whether the disclosures are appropriate in financials. You need to check financials. Disclose is appropriate. Yes, say that it is appropriate. Clear? Next, inventories. There are 3 issues. There are only 2 issues, typically speaking. Actually, this is not an issue, but it's okay. You can number it. So, physical verification. See whether inventory is being physically verified by the company at reasonable interval. Suppose if there is any discrepancy means recorded inventory versus physical inventory, there is a difference. If the difference is 10% or more in aggregate for each class of inventory, each class means what? Raw material, work in progress, and finished good. There are 3 classes of inventory. That's what each class of inventory. If there is a difference of more than 10% or more than or equal to 10% in each class, on physical verification, whether they were dealt properly in the books of accounts or not. Next, suppose company has taken a working capital loan. Is the company sanctioned with any working capital limit of more than 5 crore from banks and financial institution on the basis of current assets? If so, if at all company was sanctioned working capital limits for more than 5 crores, if so, then only this clause is applicable. Then what auditor has to verify? Whether quarterly returns and statements filed are they matching with books of accounts? If not, give details. Whether quarterly statements which company files with bankers are they matching with books of accounts data on the same dates? So if there is a difference between books of accounts and statements filed with the bank, give a disclosure. Remember, this is also additional regulatory information which company has to disclose in financial statements as per Schedule 3. Are you clear? Now remember, working capital loan means what? It can be funded loan, non-funded loan. It can be any loan, because in one of the MCQ it was asked. Funded means what? Cash credit, overdraft, all this. Non-funded means what? LOC. Letter of credit is a non-funded. So when you're considering sanction, you should consider both sanction for funded loan as well as non-funded, everything. Next, loans, guarantees, advances, investments. What auditor has to do? Whether the company has invested, whether the company has provided loan, whether the company has provided advances in the nature of loan. Here it is not simple advance, it's actually advance in the nature of loan. Okay, it's not a normal advance. Normal advance, this clause is not applicable. Advance given to supplier, advance received from customer. Okay, here loans given only they're talking about. So advance given to supplier, this clause do not apply. Advance in the nature of loan given to supplier, this clause will apply. Now, is the company has invested in somebody? Is the company provided loans to somebody? Is advance given to somebody? I think in the recent May 25, this disclosure requirement was asked. In the May 25, this disclosure practical question, they gave very big question, 5 marks question, and they're asking you relevant clause in the CARO you write, as well as disclosure requirement they asked you. Yes or no? First one, you should give a breakup. Yes, company gave investments, company gave loans. No, you should give a breakup. What breakup you should give? How much aggregate amounts were given? And what is the balance outstanding? Now you should give how much total loans company gave, what is outstanding on the balance sheet, give that data. Now split that data into 2 parts. How much is given to subsidiary, associate, joint ventures, and how much is given to others. That's it. Now, a company will give loans, investments, all that, right? Based on some terms and conditions, right? Are these terms and conditions prejudicial? Are they unfavorable? Check out. Now, company is giving loans, right? Fine, they gave a loan. Are they receiving regularly? Check out. 4th one. Suppose if they are not receiving regularly, there is a overdue for more than 90 days. What recovery steps company has taken? Check out. Suppose during the year some loans were due, but what the company did, they renewed it. They gave an extension of credit period, or they gave a fresh loan to repay the old loan. If there are any loans and advances given during the year which are fresh loans to repay old loans, then if so, specify how much amount of total renewals, re-extensions, fresh loans, how much is the total amount, and what is its percentage to the total loans granted. Check out. Next, demand loans. Did the company give any loan to anybody on repayable on demand? If so, specify how much amount is given as a demand loan, what is its percentage to the loans, total loans granted, and especially how much of it is given to promoters and related parties. That also you should show. Now you see here, there are totally, this is actually clause number A, renewals is clause number E. Just I'm giving numbering here itself, A and E. Why? These two clauses, sub clauses will not apply for lending companies. These two will not apply for a company whose principal business is lending, which means if an NBFC, which is a loan lending company, for them, no, this A and E will not apply. By the way, CARO is applicable for NBFCs. Yes or no? Because NBFC is not a bank. So CARO is applicable. Next. And further, Companies Act conditions, loans, investments, guarantees, everything, right? Companies Act conditions also you should check. If there is any non-compliance, auditor has to report it. Then deposits. Suppose if the company has accepted public deposits, check compliance with Companies Act, check compliance with RBI directives, check compliance with tribunal orders, all that. If there is any non-compliance, what exactly the nature of non-compliance you should mention. Sixth one, cost records. We see whether company is liable to maintain cost records as per 148(1). Check out. If so, accounts are they maintained or not, we need to report. Now, statutory dues. There are two types, undisputed and disputed. Undisputed statutory due, whether the company is regularly depositing PF, ESI, GST, TDS, all that. If not, how much amount is outstanding for more than 6 months as on balance sheet. On the balance sheet, there is an amount outstanding. That outstanding was 6 months before the due. Okay, that auditor has to report it. Next, further, disputed due. Dues not deposited due to dispute. Indicate amount involved and forum where the dispute is pending. Now, department raised a demand notice. You didn't respond it, which means undisputed, because you have not yet made a dispute out of it. Department gave a notice of demand. I filed an appeal to it. Now the case is pending in a forum, like at Commission of Income Tax or somewhere the appeal is pending. Then that's a disputed due. Just because you're representing, okay, just because you're replying to a department notice, that will not be treated as a dispute. There must be an active, like you must file a counter appeal on the department. Then only the due is in dispute. That's it. Now for disputed dues, what you need to give, you should disclose where the dispute is pending, how much amount is pending, the disclosure requirement. That's it. Next, undisclosed income. Undisclosed income. This is regarding what, whether they are recorded in books of accounts. The question is here, whether the undisclosed income is recorded in books of accounts. That's the ultimate question. Undisclosed income. What undisclosed income? Is there any unrecorded transaction discovered during the tax assessments? Whether any undisclosed income disclosed by the income tax department during the tax assessment. If so, whether the same is recorded in the books of accounts or not, you should check. Income tax department discovered, company paid tax on it, penalty, everything is paid. That should be recorded as a prior period item, no? Is it recorded or not? Check out. Next, ninth one, default in repayments. Defaults in repayment. Whether the company has defaulted in repayment of loans, interest to any lender. Any lender, the question is applicable here. Any lender, related party, unrelated party, bank, financial institution, government, debenture holders, anybody. Did the company defaulted in repayment of dues to lenders? If so, indicate lender-wise details. What details you should indicate? What is the nature of the loan? Who is the name of the lender? How much amount? Principal or interest? How many days delay? Any other remark? Remember, this breakup is required only if the lender is a bank, FI or government. Breakup is required only when these three are involved. If at all, debenture holders I defaulted. Just mention the fact that debenture holders it is defaulted. No need to give breakup. Debenture, 10 lakh debenture holders will be there. What you will name in audit report. Next, diversion of funds. What is diversion of funds? Term loans, no. Are they applied for the stated purpose or not? The company has borrowed some loans. Whether the loans were used for same purpose or not. If not, indicate the amount diverted and purpose. Short-term funds. If any short-term funds were used for long-term purpose, the company borrowed short-term funds for working capital purpose, but purchased a plant and machinery using it. So it's a short-term funds used for long-term purpose. If so, indicate the nature for which it was used and how much amount is diverted. Next. The company has taken funds to meet obligations of subsidiaries, associates, and joint ventures. Is the company taken any funds for meeting subsidiaries, joint ventures, and associates for their requirements? If so, details, nature of the loan, and how much amount. Sometimes, companies, I have a subsidiary company, I have shares in that, I have an associate company, I have a shares in that. These shares I will pledge in a bank and then get a loan. So, whether the company raised any loans on pledge of securities which are held in subsidiary, associate, joint venture. If so, report details of default in repayment of these loans. If at all you kept subsidiary company shares in a bank and defaulted, you lose the subsidiary, you lose the holding company status. Bank will assume the holding company status temporarily. Yes or no? Next, and whether the company is declared as willful defaulter by any lender. Check out. Next, end use of funds. This is regarding IPO and FPO. This is regarding IPO and FPO especially. Whether company raised any money in the form of IPO, FPO, whether the money utilized for the same purpose. If not, for what purpose it was misused, default, or if there is any delay in you using the fund, and subsequently they would have rectified it. Even if they rectified subsequently, still you have to report it. Preferential, whether the company has made any preferential allotment or private placement. If so, verify compliance with section 42 and utilization of the amount, is it for the same purpose or not. If not, provide the details like what is the amount of diversion, how much is the non-compliance, all that. Then fraud reporting, there are 3 issues. Any fraud by the company or any fraud on the company, noticed or reported during the year. Noticed or reported means identified by the company itself. Okay, it is not identified by auditor. If there are any frauds by the company or on the company identified, if yes, nature of the fraud, how much amount involved, you have to report. Further, if at all the fraud identified by the auditor is more than 1 crore, you will file a form with central government, right? ADT4. So regarding that, you should give any report filed by auditor with central government in ADT4. If so, give the details here. Then, have you considered? They're only asking consideration. Understand? The company has a whistleblower mechanism. There is a whistleblower complaints. Have you considered those complaints? Because this consideration of whistleblower complaints is important when we are doing risk assessment procedure. When we are doing risk assessment procedure, we should consider whistleblower complaints, all that. Next, Nidhi company. Okay. Whether the Nidhi company complied with net own funds to deposit ratio 1:20. For every 20 rupees liability, 1 rupee own funds must be there. Further, Nidhi company has to maintain liquidity. How much liquidity they should maintain? 10% of unencumbered term deposit. 10% unencumbered term deposit. Nidhi company will accept so many deposits. Out of it, 10% they should maintain in term deposit as a liquidity. It's a liquidity crisis. For banks, SLR is there. Yes or no? For NBFCs which are in deposit taking NBFCs, some liquidity criteria there. For Nidhi companies, this is the criteria, liquidity criteria. Next, any default in repayment of interest and deposit. If so, mention. Many students will write both the points. This point they will miss when they ask a question about Nidhi company. Whether Nidhi company defaulted in repayment of loans and deposits, whether the Nidhi company defaulted in interest. This point many will forget. That's why. Okay. Next, internal audit system. Is the company has sufficient internal audit system commensurate with the size of the company? Check out. And so whether internal audit system commensurate. So company has an internal audit. For namesake internal audit is there, but nobody is there inside that. So you have to give a qualification here. Further, internal auditor reports, you have to consider. How do you consider internal auditor's report as per SA 610? Next, related party transaction. Company has entered with related party transaction, obviously. Check compliance of 177, check compliance with 188. Details must be disclosed. See, 2 elements here. One is Companies Act compliance. Another one, accounting standard disclosure. One, whether related party transactions are in compliance with Companies Act. Second requirement in CARO is what? Whether related party transactions are disclosed in the financial statements as per applicable accounting standard. That's it. Next, non-cash transactions. So, whether company entered into with any non-cash transaction with directors. If so, whether 192 section provisions have been complied or not, auditor has to check. Then, NBFC. Is the company required to be registered as an NBFC? So, is check principal business criteria for the company. See whether the company satisfy principal business criteria. Most of the companies will not satisfy. Yes or no? So, see whether the company is liable for registration. Suppose, company, have they conducted any NBFC activity? NBFC activity means principal business only. Both are same only. Almost it is. Okay. Next, group CIC. Is the company core investment company as per RBI regulation? If at all a company is recognized as a core investment company, is it fulfilling the criteria even now? Check out. Suppose if the company is an exempted core investment company, see whether the exemption criteria is still fulfilled or not. And moreover, if the group of companies, if this group company has more than one core investment, if yes, indicate the number of core investment companies. That's it. Next, cash losses. Did the company suffer losses in the current year, and have they suffered cash losses in the current year? See, as per P&L account, the figure might be loss, but if you add back depreciation, it's a profit, for example, which means there is no cash loss. Are you getting it? So if to the real loss, non-cash expenditure if you add, still if there is a loss, that's actually a cash loss. Now, whether the company incurred any cash losses in current year or in the previous year, if so, state the amount. Next, resignation. Any resignation during, is there any resignation of auditor happened during the year? Then see, I am a replaced auditor. The existing auditor resigned and I am replaced. So that time this reporting requirement will apply to me. Okay, so if there is a resignation, outgoing auditor objections, all that will be there. Now, did I consider that or not? I should report it. Next, material uncertainty. You see how clearly they have given MCQ is very important. You know, auditor has to check. There is no material uncertainty exists. On which date you should check this? On audit report date you should check. This requirement you should check on which date? Audit report date. When you are signing the audit report date, that date you check. What you should check? On balance sheet date, company have so many liabilities, right? Liabilities existing at balance sheet date, right? There are so many liabilities on balance sheet date, right? Whether the company can repay the liabilities within the due date as and when falling within the next 1 year from balance sheet date within 1 year, whatever liabilities falling due, will the company repay? Can the company repay? Do you think the company can repay? Check this on audit report date. Are you clear? Next. Then finally we have a CSR related disclosure. You know very well, CSR, a company has to spend 2% of so average net profit for corporate social responsibility. This amount can be spent upfront in the same year, or it can be used for a particular project also. Yes or no? And as on 31st March, if at all unspent amount is there, that has to be transferred to special account. Schedule 7 funds, it has to be donated. Suppose if the amount is pending because of a project, then it has to be transferred to special account. See whether it is transferred to Schedule 7 fund or not. See it is transferred to special account or not. So other than project expense means that amount which you have to spend by 31st March, but you didn't spend. See whether the unspent amount is transferred to Schedule 7 fund within 6 months. Then project expenses, you allocated money for project as on 31st March, still it is not yet spent. It has to be transferred to special bank account. That's it. Unspent amount has to be transferred to a special account referred under 135(6) or not. Just check out. Then clause number 21. This is applicable for only consolidated financial statement. This clause is not applicable in the audit report for standalone financial statements. So any qualifications, any adverse remarks by respect to auditors in CARO for companies included in CFS. In consolidated financials, there are so many companies which are included. So some subsidiary companies, for example, you take Reliance Industries, they have 300 subsidiary companies, 180 associate companies, some 40 or 50 joint ventures, more than 500 companies were included in consolidated financial statements. So Reliance auditors, on Reliance principal auditor on consolidated financial statements, they give a CARO report. Only one clause, 21 clause. Below that, so and so companies are subsidiary companies, so and so companies are associate companies. Their auditors in CARO report under so and so clauses, they gave a qualification. That fact you need to mention. Are you clear? That's it. And reporting requirements, whether it is positive or negative, you need to report. For unfavorable answers, you should give reasons also. That's it. With this, CARO is completed. Clear? All of you. Next 143.3. 143.3. The auditor has to give certain affirmations. Whether you obtained information, explanation sufficient for the purpose of audit. First question. Whether proper books of accounts are maintained by the company. Whether branch returns are received by you. Whether branch audit report considered or not. Whether financials are matching with books of accounts or not. Whether financials are complying with accounting standards or not. Do you have any adverse remarks or comments or observations on any transactions of the company? Is there any director disqualified? Are there any qualifications, reservations or remarks with respect to books of accounts? And see whether internal financial controls are adequate and operating effectively. And this requirement does not apply to OPC, small company, private limited company whose turnover is less than 50 crore and borrowings less than 25 crore at any point of time. Okay, and this turnover has to be taken as per the latest financial statements. This is not preceding financial, it has to be latest financials. And further, the auditor has to report on pending litigations, provisions for long-term losses, whether the company has maintained provisions as per accounting standard for various long-term losses, derivative losses, whether company has delayed while transferring money to IEPF, the auditor has to report. Further, the auditor has to check whether company declared dividend and complied with 123 of the act or not. Whether company is using accounting software with audit trail feature and see that it is not tampered and see that it is preserved for 8 years. These are the points which auditor has to verify. And apart from this, auditor has to get a management representation. Auditor has to get a representation, funding party, intermediary, beneficiary. Funding party, intermediary, beneficiary. Now, did the company acted as a funding party? Check out. Or did the company acted as an intermediary? Check out. As per Schedule 3, additional regulatory information, wherever company acted as a funding party, wherever company acted as an intermediary, they should give some disclosures. And in the company where I am auditing, they gave disclosures. Other than that, Other than those disclosures, is there any other transaction involved? Director said no transaction, sir, everything is disclosed. Now give me a declaration for that. That's what this point is saying. So other than disclosed in financial statements, funding party not advanced loaned, intermediary not received any funds, other than disclosed, we have not funded anything, we have not received anything. Whatever funded, whatever received, we disclosed already in the notes to accounts. Like that, you need to get a disclosure. Are you clear? So funding party, suppose my company, we funded some money to intermediary, and that intermediary has to transfer to beneficiary, or the intermediary has to give a guarantee on behalf of beneficiary to some third party. So now I need to give disclosures. I think this disclosure requirement is not relevant for you. It is there in CA into syllabus. Disclosure requirement is also there in CA into syllabus. Clear until now? You just have to take a declaration. You just have to take a representation that other than disclosed in financial statements, there are no other transactions like this. Get a declaration that they're all completely disclosed indirectly. That's it. It's only about representation. Are you clear? All of you? Next. So that's it. Duty to inquire 6 matters. Duty to inquire 6 matters. That also I'll cover once. Now, whether the company has granted loans and advances on the basis of security. The company gave on the basis of security. If so, they are properly secured or not, check out. See, the terms are not prejudicial. Company will have so many book entries, depreciation, provision for bad and doubtful debts, all these are book entries. Are they favorable or unfavorable? In the sense, are they genuine or not? Are there any shares which are sold below purchase price? Means company purchased the shares and securities of some other companies and sold at loss. Okay, now, so that information has to be given, and this point is not applicable for banks and investment companies for whom buying and selling of shares is an operating activity. Next, personal expenses of the directors, are they charged to revenue account? Loans and advances given by the company, are they shown as deposits? And if at all any shares are allotted for cash, cash means what? Monetary consideration. That's what the meaning. Okay, whether the cash is received or not, if not, whether the position stated in the books of accounts and financial statements is correct. Positive responses, you can ignore it. Negative responses, you must state in the audit report with reason. If at all for any of these inquiries the answer is positive, you don't have to inform that in audit report. Whereas 143.3 affirmations 16 matters, 143.11 CARO 21 matters, whether positive or negative both has to be reported. That's it. Audit report is completed. Clear all of you? With 3 other standards also be completed, which are as part of gap chapter. Technically in gap chapter 2 or 3 more standards only pending. Not gap, strategy chapter. In strategy chapter 1 or 2 standards only pending. Technically speaking, that chapter also over. Predominantly that strategy chapter is also over, and audit report chapter is also over. Clear? Yes. 2 minutes, we'll continue with the next chapter.